almost 1% gone on the Sensex. That's about 300 down, and on the Nifty about 0.75%, 0.8.
The market is down and out. It's down about 1% as we start. The market is down somewhere. It's down about 100 points or so. 10,283 is where we are at.
It's been a weak day for the markets, but you know what? The market just trying to sort of fight back a little bit and trying to protect the intraday lows. It's been a market which you'll say it's down but not out.
Dalal Street underperforms. Sensex and Nifty end over 0.5% lower. FMCG stocks end higher, but financials drag.
Financials pull Dalal Street lower. High beta stocks see selling. Nifty Bank falls over 1%. However, Piramal and HDFC Bank are the outliers on capital-related news.
Nifty Pharma ends flat but outperforms in an otherwise weak market. Cipla, Aurobindo Pharma, Glenmark and such other stocks rally between 0.5% to 2%.
Bharat Forge and Coal India take a beating, fall between 5 to 10% after they reported a weak set in the fourth quarter.
And MSCI is likely to announce a rebalancing of its indices tomorrow. Kotak Mahindra Bank rallied over 1% on its likely inclusion in the index, and Biocon and IGL fell on fears that they may be Biocon and IGL also may be included. Well, those were the top 5 headlines from Dalal Street on a day when the indices started lower and didn't quite perk up despite getting positive cues from the European market. Welcome to Markets Today, the show where we will tell you all that happened in those 6 hours of trading in just 5 headlines. I'm Latha Venkatesh, with me my colleague Prashant Nair. Hi Prashant.
Latha, hi. 90 points off the lows on the Nifty, so this seemed like not a bearish day at all. We'll bring you what happened in the market in terms of action, opinion. You'll hear from Kevin C. Smith, founder and CEO at Trescat Capital. He's sounding the alarm bells as far as the US market is concerned. You'll hear from Prakash Devan. He'll give us his outlook on the pharmaceutical space. The space held out today in terms of stocks. In corporate voices, Nandini Piramal, Executive Director of Piramal Enterprises, on the deal. Baba Kalyani, Chairman and Managing Director of Bharat Forge. The stock was down after results were poor. We'll get to that in all of that in just a bit. But as always, let's wrap up the day's action right at the word go. Latha, let's talk about the top down. What happened?
Well, actually, the morning was weak because the overnight cues, or rather the over the weekend cues, were very weak. The Dow had fallen over 700 points. And Asia, therefore, was kind of under the weather. But actually, the Dow Jones futures started recovering around noon our time, and the European indices were actually in the green, but we never quite showed that level of recovery. As you said, we may have been 90 points off the day's lows, but still it's over a 0.5% fall that we're seeing in the Sensex and the Nifty, almost 2% fall in the mid caps, and in the Nifty Bank as well, over 1% lower. So we didn't quite recover. It's possible that we were under the weather because of local cues. The global headwinds were affecting us, but more were the local macros. And here it's not just poor earnings and the slowing of the reopening of the city economies, especially Mumbai, where now the restriction is that you can only travel 2 kilometers from your home unless you are one of those emergency services or essential services. These reiteration or even slightly intensifying the controls, indicating that the economy is going to recover even more slowly, and the fear of this uncertainty over Chinese imports could both be, bedeviling the bulls. One can see that especially in the financial stocks. I mean, who would be hurt in an economic slowdown? Who would be hurt if manufacturing slows down? Whichever way you cut it, it'll hurt the banks. And that's why you saw financials feel the pinch. But others like autos also were feeling the brunt. And that's why you saw traders generally swarming towards the classic defensives, the FMCGs and pharma. But you give us first the stock-specific picture, please. So,
as I said, Latha, 90 points off the lows on the Nifty. The Bank Nifty was off about 340 points off the low. So, that's a fair bit of pullback. The Nifty losses in Coal India, Axis Bank, Hindalco, Tech Mahindra, SBI, Wipro, BPCL, L&T, Z. I mean, these are the big cuts. The gains in Kotak Bank, which surged after, our colleague Nimesh put out news that it may be part of the MSCI rebalance announcement tomorrow. HDFC Bank was doing well. It picked up a little bit more towards close, and Britannia was the other one, which was up about 1.8%. In the broader market, breadth was negative, but where were the big losses? RBL Bank gave up. Ashok Leyland was down. Bharat Forge, some of this, of course, results related. Future Retail, Sun TV, Ujjivan Equitas, Trent, Adani Gas, Imami, and Ruchi Soya, which has had a dizzying one-way move up. I mean, it was finally down about 5% or so in trade. Latha.
Yes, thanks for that. But Prashant, earlier in the day you were explaining to us that the breadth of the market has improved. Even today, 1.6% off the mid caps, as you point out. But nevertheless, the breadth is not that bad. It's not even 2 stocks in the red for 1 in the green. It's 1.5 stocks in the red for 1 in the green. So you were telling us that the breadth of the market is improving?
The breadth of the market has improved vastly, Latha. So I basically looked at where things left off on Friday, the last Friday, as compared to the 5th of June, which is the first week, the end of the first week of June, right? Beginning of June to now basically. And I looked at stocks which are up over 60%, up over 40 to 60, between 20 and 40%, about 20%, basically different categories. The big takeaway is this. The number of stocks, and this is about 1,800, and if you can have the graphics up, the number of stocks which are up over 60%, from the March lows, as of the end of last week, is now 729 stocks. That's essentially, 39% of all listed universe. At the beginning of June, that was only 429 stocks. That was 23% of all NSE. So, it's basically become a much more broad-based kind of market. And in the same period that I'm comparing, the Nifty moved a mere 2%. And you can look at a couple of other broader market indices, and they also did not move too much. So these are stocks in the broader space, probably falling outside of the conventional well-tracked indices, which are doing very, very well. Look at other parameters. The first row is what we discussed. 429 stocks became 720. Stocks which are up over 60% from the March lows. Stocks which are up over 40 to 60%. They're kind of flat, only 2.5% gain there from the beginning of June. Stocks up 20 to 40, 0 to 20, and stocks which are still below the March levels, all those categories have actually seen a decline. The reason is, as time has passed on through the course of June, stocks have basically graduated to more gains. They've moved up to 40 to 60 and over 60%, where there is maximum amount of gain. So this is no longer a market where, you can say that, you can make a generic comment that there is vast amount of value or vast underperformance in the broader market. That is not the case. For almost 40% of the market is now up over 60% from their respective March lows, Latha.
Fair point. So the recovery in the mid caps have become significant. Okay, we will revisit this topic, time permitting, but let's get you some global market opinion. Kevin Smith, the founder of Cast Capital, says that the underlying fundamentals globally, United States and the world included, are simply not supportive of the meteoric rise in stock prices. Listen in.
We believe we're in a speculative mania, and it's really a valuation mania, an overbought stock market, a relief rally that's just gone way too far in what we believe is a global recession that was brought on by a record debt bubble even before COVID-19, and a record long expansion here in the U.S. market. So the combination of the valuations, the speculative mania that we have on all of this Fed liquidity, it's just crazy. And I think it's something that is going to wear off like a drug, and we're going to find that we're still in a recession with the underlying earnings fundamentals just not supporting stock prices where they are today. Low interest rates are one factor in a discounted free cash flow model, valuation model for stock prices, but there are many other factors that go into the discount rate when you're trying to discount future cash flows for companies. And when you have record debt at U.S. corporations, and when you have record slow economic growth because of all of that debt. And when you're in the middle of a recession, there is no premium valuation that's justified at all. I don't think the Fed's going to be loosening the reins on liquidity anytime soon. The problem is there's just too much debt.
Okay, that's some opinion, not very positive as far as stocks are concerned. Kevin, though, likes gold as an asset class. He thinks gold should do very, very well. More opinion a little later, but let's get to the second headline. High beta financial stocks pulled the Wall Street lower. Nifty Bank fell over 1%. However, Piramal Enterprises and HDFC Bank were the outliers on capital-related news. Latha.
Oh, well, there were plenty of reasons why financials would have a problem. I mean, these reasons were valid even earlier, but a little more valid now because over the weekend we learned that more states are pulling back on the opening up. I mean, first it was just Guwahati and Tamil Nadu. Now Telangana seems to have joined. And even in Mumbai, the new rules that have come from the Maharashtra government are indicating a little more restriction, tighter controls. So people are not going to go out and shop anytime soon, which means, again, banks will have the problem since their borrowers will not be making money. And the second problem is this China issue. Now it is the 8th day. It was last Monday that we first heard that, probably Chennai port is not clearing some imports. But now it's 8 days. And, that means more and more companies will face losses. And again, it will fall on the books of banks. So there were enough reasons, incremental reasons why banks and NBFCs should not do well, but they are just high beta. So as you pointed out, when things rise, banks rise more. And actually, even more high beta is PSU banks. And today, the PSU bank index is down 3%, while the Nifty bank is down 1% plus, while the Nifty is down only 0.5%. So it's high beta on both sides. And more importantly, the two stocks that are outliers, Piramal is doing well because asset liability mismatch was an issue. If they're able to sell some of their family silver and make money, the market is happy. So they stood out. And HDFC Bank later on in the day, second half of the day, scorched some newspaper reports that they're raising capital, which means, okay, there's no dilution. That could be a reason why that one stood out. But I think there's more on Piramal. Absolutely.
I mean, let's actually hear it from Nisha, who's been following the Piramal story, reported on this on Friday as well, that this deal is imminent. Basically, Carlyle is picking up 20% stake in Piramal's pharmaceutical arm for close to $500 million. Funds will be used to repay debt, as you pointed out, to acquire, deleverage and acquire some other pharma assets as well. Nisha is here with details of the deal and what brokers are making of the transaction. Nisha.
In a significant transaction, Carlyle is putting in $490 million in Piramal Pharma for 20% stake in the company. This will be utilized by Piramal in deleveraging the balance sheet and bring down their debt levels from 4,200 crores currently to 2,500 crore rupees. But in future, they will be eyeing several acquisitions in the domestic as global sphere, and for that they are okay to take more debt in future as well. Now, this was about the proceeds of the transaction. There's an upside built in. If Piramal Pharma really meets most of its projections for FY21, then an additional $72 million would be pumped in by Carlyle. Now, most of the brokerages have given a positive commentary on the company and have given a higher target price, even though the stock has recovered and doubled in the last 3 months, given the Carlyle transaction as well as also the pharma run-up which has been seen. Now, despite that, there is more uptick expected because the valuations of the NBFC and the financial services business has also improved, improved because of this transaction, because of the ability of the promoter group to raise funds and also to deleverage. The promoters and the management have given further indication on further fundraising plans, and that's giving some comfort to the investors. And on the other hand, remember, the eventual listing, especially of the pharma business, is something to be watched out for.
All right. Yes, actually, when the capital market is kind, these things perhaps should be taken advantage of. Thank you very much, Nisha. The point is taken that if the investors had worries that there will be asset liability mismatch, that some liabilities will mature and the Piramal Group can't pay, all those fears have been scorched. Let's hear it from the person from the stable itself. Nandini Piramal of Piramal Pharma spoke to Nisha on the stake sale.
Carlyle will give Piramal 490 million. That's about 3,700 crores. And a year from that, if we meet our FY21 projections, we should get 20% of $360 million, which is about $70 million. We're very confident in achieving our both organic and inorganic growth targets. I think pharma is a global business. It's actually a very strong and resilient business, even in in the current circumstances. And we think it's a very defensive business. So we expect to continue our growth trajectory as we have in the past. Immediately, we will do some deleveraging so that the cash doesn't burn a hole in the pocket. So if we look at it, our debt at FY20 was 4,200 crores. We expect at FY21 to be about 2,500 crores. So we will reduce debt. But we will also increase debt to actually do acquisitions and capital expansion.
All right. So that's Nandini Piramal from the pharma unit of the Piramal Group. Let's stick with pharma. The third headline today actually was about pharmaceutical stocks. The Nifty Pharma Index ended flat, but it still is an outperformance in an otherwise weak market. And among the stocks that stood out, a bunch of them were pharmaceutical companies. Cipla, for instance, Aurobindo Pharma, Glenmark Pharma, all these rallied between 0.5% and 2%. Well, what's making some of the pharma companies stick? Here's some opinion from Prakash Diwan.
I think we are in a mood to reward good news. That's where the market is currently. And pharma seems to be the favorite poster boy for this market. So anything related to pharma suddenly starts seeming much sweeter than it is. And that's precisely the reason why all these companies which hadn't caught up with the fancy were kind of doing that. So it's like copybook. You had the likes of Oro and all starting off, and then you had the likes of Cipla, and then of course the Glenmark. So you would have to look for the next pharma thing, provided there's fundamentals to back it. Glenmark is not yet on my top list. I would still prefer an Oro. I would still prefer an Torrent. I would still prefer an IPCA, because these are businesses which are also well balanced on the domestic side.
Okay, well, let's move on and let's focus on the rising tensions between China and India. Import shipments from China continue to be stranded at ports, but now we understand that Indian exporters are actually also facing similar issues on the other end, on the Chinese side. Well, delays in Hong Kong and Chinese ports are being cited by exporters that my colleague Alisha Sachdev spoke with. Alisha.
Well, Prashant, that is right. We're now seeing that some Indian exporters have said they're facing some delays in getting their consignments in Hong Kong and China cleared. In fact, our sources say there were indications from China that they may want to retaliate and physically examine Indian containers, but there hasn't been a very serious move in this direction so far. However, there were some attempts which were made to open up Indian containers for such examination in Hong Kong as well as Shanghai. Now, taking note of these concerns, the industry body FIO had written to the government, and it has said that China may retaliate in equal measure if these actions in this uncertain environment continue. However, back at home now for the 8th straight day, the bulk of Chinese consignments continue to face issues and delays at Indian ports, and many containers are stranded at sea. In fact, there's a very minuscule number of containers which are now getting cleared. This would include the Ford Motor Company, for instance, which has now said that its consignment in Chennai has been cleared after some delays. But by and large, the delays on account, which were already running into a month on account of the COVID-19 lockdown, are now exacerbating. And this is happening especially in the case of Chinese imports. In fact, there is impact across sectors, but the Association of Auto Components Makers also today has put their concern on record and said that engines and electronics components are something which we depend on China heavily for, and we haven't developed competence in this area so far, and that it would be best avoided in the future, that these disruptions would be best avoided in the future so that production can be ramped up.
Okay, Alisha, we are getting out of time. Thank you so much for all those details. So problems on both sides, Indian side as well as the Chinese side, but some first signs of relaxation. And Ashmit has that positive news. Ashmit, what are you picking up?
What we're picking up is that a week since the customs had launched this inspection offensive, a week later, which is this Monday morning, there are some relaxations that we're beginning to see. What industry sources tell us is that top tier importers which meet the highest grade of compliance with the best global practices, classified as AEOT3. These top tier importers have been given the relaxation from 100% inspection. Now, that's a very, very small list that we're talking about. There are only 11 importers which stack up as far as this top tier of importers are concerned. The companies include the likes of Toyota, Honda, Samsung, LG, HP, and Siemens. These are the more prominent names amongst the 11 companies which meet that norm, which meet the top tier. This importantly marks the first step that customs seems to have taken. But importantly, this is what it is, just a step, nothing further, because a bulk of the 3,500 companies that are registered with customs as importers, of them only 11 meet this top grade. A bulk of these companies don't have eligible for these relaxations. So clearly, the first step has been taken, but a lot more needs to be done.
Right, first step. Ashmit, thanks very much. Appreciate you getting us those details. It's an important story. We'll keep track of it. We'll take our first break here on the show as well. We are back with more headlines on the other side. Welcome back. You're still with us here on Markets Today. We ran through three of the top stories. Let's go through the rest of the headlines. Headline number 4. Bharat Forge slid 10% following a weak fourth quarter performance. My colleague Sonia is here to wrap up the numbers. Sonia.
You know, the problem with Bharat Forge this quarter is that there is no good news at all across the board. So not only have they reported a huge net loss of 73.3 crores, there's a one-time loss that the company has reported of 94 crores, which has hit their profitability. The revenues have also seen a steep 47% fall this time around. That was in line with estimates. But if you look at the one-time loss, it's because of an impairment of an investment that they made. They have provided 89 crores towards impairment of investment in Teva Motors, Jersey, which is a startup company for modular electrification systems for medium and heavy commercial vehicles. Now, what they're saying is this startup company which they invested into was severely affected because of the COVID crisis, and the financing and commercial outlook remains very uncertain now. Not just that, the balance sheet and the return ratios of Bharat Forge have also worsened substantially. The long-term debt has risen to 1,835 crores as on March 31st versus 1,572 crores same time last year. The debt equity ratio has worsened to 0.61 times, and the return on net worth has gone down drastically to 8.8% versus 19.8%. Now, if you look closely at the commentary, it is quite weak. The management is expecting a cash loss in their overseas operations in the Jan to June period. They say that despite cost reduction initiatives as well as aid from various governments, the overseas operations could post a cash loss of 5 million euros in the Jan to June period.
Okay, that's hit hard. Let's hear from the big man himself. Baba Kalyani spoke with us, and here's what he had to say.
Right now, we are going on the basis that we will see something like a 25 to 30% lower demand from our customers in the European market. The projection of the loss is largely coming in because there was a lockdown in the month of March, April, May in Europe. So for almost 2 months, the plants were all closed, car plants were closed, dealerships were closed, and therefore our factories were closed. Any green shoots or upward movement in this area will only start after the September is over. The first half of this financial year is over. We honestly don't see, except in the sector of passenger cars.
Okay, let's move on to the fifth and the last headline then. The MSCI rebalance announcement may be tomorrow. My colleague Nimish is here with the details. Nimish.
Hi, Prashant. So, there was an official announcement from MSCI that they will provide some communication with regards to the India weightage in MSCI late by June 30th. So, maybe by tomorrow they might announce something. If you remember, just to go back to this background, on April 1st, India moved into a new regime of foreign limits, wherein the FPI limit was increased to the sectoral limits for a lot of stocks and sectors. So, Morgan Stanley did written a note in April then, and they said 5 stocks where the weightage will go up will be L&T, Asian Paints, Bajaj Finance, Nestle, and DB Labs. These are 5 stocks which is going to see maximum increase in terms of stock weightage. Interestingly, there are 3 stocks which Morgan Stanley believes will be included into MSCI. Those are Kotak Mahindra Bank, Biocon, and IGL. So these are the stocks to watch out for. In terms of weight reduction, because of depository receipts getting removed, you'll see weightage coming down for ITC and Bajaj Auto. So those stocks may see some selling pressure. These are Morgan Stanley expectations, but watch out if there is an official announcement from MSCI tomorrow.
Not for that, we will watch out, and we have to wrap up on this edition of Markets Today. Thanks for watching.